Hey everyone, John Henry here, Slingshot Futures Trading Group. Thanks for joining me in today's video. Before we start, take a second to give the video a like, subscribe to the channel, and make sure to click the notification bell icon so you don't miss our next live stream or next video launch here on YouTube every day. Make sure you start your day off the right way. Don't forget your free morning brief that's waiting for you at ssftg.com/brief. In the top left, you can click on morning brief to jump into that. That's where you'll find all of our major DP levels right up here at the top, as well as a quick technical overview for the major 6 markets that we look at: the NASDAQ, the S&P, you've got gold, crude oil, the euro, as well as Bitcoin. Maybe you're looking to get a full game plan for the day, week, or month. Check out the join button below. Level 1 subs get a brand new members only video every single morning going over the major 6 markets and a game plan for the day. In addition to that, once a week I launch a weekly brief, and of course once a month we have our monthly brief as well. Of course, all members gain access to our private Discord chat server, and if you really want to get into the nitty-gritty, check out the live analysis room for level 2 subs, where you can see my screens in real time during the New York Stock Exchange Open. You can ask questions and interact with the other members, as well as bounce ideas off myself and everyone else. It's a fantastic environment, and I would love to see you in there. All right, and now on to the really fun stuff, the topic for today. Days with little opportunity. There are going to be those days that come along during our career as traders where there's just simply nothing to do. Nothing's happening. And this can show up in a couple different ways. The market's gone completely to sleep, right? You can't trade what isn't moving. And then the others, when the market is only moving, and it just never pulls back. I know those two types of days are drastically different, but obviously when it comes down to it, the same question, the same problem, the same conundrum comes up. Where do I get in on those kinds of days? How do I approach a market like that? So in a market that's dead slow and it's just not doing anything, it may just be due to the time of day, right? If you're not trading a US market during US hours, like if you're trading a US index market at 3 in the morning, you're not going to see the best movement that market has to offer. It's just kind of common sense stuff. Now, it could also be due to an extremely low amount of volume where there's nothing happening because nobody's doing anything, right? These types of moves, or lack of moves, can be extremely dangerous because it only takes a few big chunks of orders to really spark some serious things to slide. And that's when it can happen out of nowhere, when you least expect it, when you don't necessarily want to expect it. That's when those types of things are going to happen. And then, of course, there's the other type where it just keeps running and running and running and running and running and running and running, and they just never pull back. Or if they do, it's like half a millimeter. And if you have any luck like me, good luck getting filled at the price that you want, because it's never going to happen. It just feels like it's gone too high all day, but it just keeps going higher and higher, or lower and lower. And you obviously don't want to counter trend a day like that because, well, it's obvious, it just keeps going. But what else can you do? Wait for the non-existent pullback to never come? It's one of those kind of catch-22s where you're just sort of stuck sitting on your hands because that's the best option at the time. So in both situations, we kind of have two approaches. You either have zero trades, which there's nothing wrong with, in that, it's completely fine. Nothing fits your plan. If you're not taking any trades because nothing fits your plan, then you're following your plan. You're doing what you're supposed to be doing. Or the other side of things is that you utilize a lower risk approach with something like micros, or if you're trading stocks, lower share sizing, utilizing options, something to reduce your risk so that while the market is going crazy or while the market's doing nothing, your account exposure to risk is not that much, right? It's manageable. Even if it does go crazy, it's not a catastrophic event. It's something that you can easily just, okay, well, whatever. If it was wrong and if it was right, cool. You got your feet wet along the way. It's not a huge win. It's not a huge loss. It's just minimizing the exposure by utilizing that reduced risk approach. So the important thing here is to understand that these days will happen. And what we need is a plan of action when they do, so that even if it is only a few times a month, we know exactly what we're supposed to be doing in those situations per our plan. So a few days ago, we had a great example of this where this was back on, just as reference, on 119 and then on 120, where the market started off with this gigantic rip to the upside, but you'll notice the timestamps at the bottom. It was at 7 p.m., 8 p.m., midnight, right? So for a U.S. trader looking at trading a U.S. market, we've got a situation that it's going crazy while everyone's hanging out doing something else or sleeping. So when we finally come into the U.S. session, which happens right here, that's 9:30, nothing happened. Everything already happened. Right? All the traders for the U.S. session that are coming in, they're left kind of in the dust thinking, well, wait a minute, this just rallied from 12,800 all the way to a high of almost 950. And I'm coming in when it's at 900, just doing nothing. Some buyers might say, hey, this might be an opportunity to buy a pullback, but then we can see how that turned out. It went up a little ways, kind of rolled over sideways, and then it looked like it was going to break down, but then it didn't go anywhere and went right back up again and tried going higher and then went down again. And that's the type of day that it was. Just nothing happened. And then, right, all of a sudden, the rocket boosters took off, and this thing goes screaming to the upside over a multi-day run into the next day where there just wasn't a pullback. So you have this extreme type of two different approaches all smashing into one another. And this is where you really have to be agile, because you're either, again, going to have no trades in this situation because nothing lines up, or it did line up, took a couple losses, now you're just sitting on hands. Or it's just hammer down, gas pedal to the floor, through the floor, minimize the aggression a little bit in terms of risk, right? Using those micro markets and bringing the risk down dollar value wise, but then going along and hitting the gas pedal because we're mitigating our risk. There's two very different approaches, and sometimes they'll happen on the same day. And that's where you really have to be careful in your approach, because if you're taking a range fade and the market just hit the gas pedal, all of a sudden you're the one holding the bag while it's screaming away from you and you're watching your entire last week's profits disappear. So in these types of situations, this is where I like having what I call breakpoints, where the market has done something so drastically different from what I was expecting it to do that it's broken. It's broken my expectations. I now have to reevaluate. And every pattern is going to have a breakpoint, right? Now, some patterns will have more aggressive breakpoints, some will have smaller breakpoints. But either way, you have to have a type of approach where if I'm looking at being we'll just use a simple Fibonacci pullback. If I'm looking to buy a 50%, and I'm waiting at the 50% to become a buyer, then realistically, I should see the 50% hold pretty well. It shouldn't break underneath it by too much, maybe get down to the 618. But that's your expectation, is somewhere in here. The break point then would be if it starts going outside of that, where it's invalidating the entire reason why you were looking to take the trade in the first place. That's a break point. Now, when a break point occurs, you have a few different ways to approach the market. You can just simply exit with a hard stop. That's usually the safest route. Then there's the other route of trying to mitigate risk by allowing the break point to hit, having a catastrophic stop a little bit further down, and seeing if the market will come back a little bit further and exit while it's coming back up, just to minimize a little bit of risk. Obviously, that one requires a bit more practice. But either way, you've got to have these break points when I'm looking at something to happen and it doesn't, right? Something is completely shut down. If I were a range trader in this and I were looking to fade these ranges, well, realistically, I want to be a buyer below the lows and I want to be a seller above the highs. And so far, they haven't even been able to make any new highs. It's been lower highs all the way down. So when it finally starts breaking the highs, sellers are going to be piling in all over the place, expecting it to roll over. But it didn't, and it just kept going higher and higher and higher, and that's what triggers that stop run into a market that never pulls back. And then you have to switch gears. It's that break point that really tells you, wait a minute, something has totally shifted gears. I need to reevaluate what I'm doing so I don't get caught under the treads of this monster truck that's coming at me. So what's your plan when the market goes to sleep, or when it goes crazy, or when it goes bonkers and never pulls back? Do you have a different approach for those types of markets? Maybe your strategy already incorporates those types of markets. I would love to hear it in the comments below. Thanks for watching, everyone, and like I always say, stay safe out there, keep those stops in play, let the winners run. Have a great day. Thanks.